Can you look at your screen, whatever you're doing, stop? Is this finally the moment where the energy market is seeing the first signs of demand destruction? Well, that means when prices go so high, people stop demanding it. Crude oil at the moment, $110 per barrel, down 6.5%, went as low as $106 during the regular session. And you can see RBOB gasoline down 4.33% to $3.78. The pullback in those prices, though, still is going to have a ways to go before it makes its way to the pump. According to AAA, diesel prices hitting a fresh record. The current average, $5.79 per gallon. Now, regular gasoline, retail, right, has eased off the high we saw on Tuesday. Right now, the national average is standing at about $5 a gallon. Our next guest, with $363 billion in assets under management, well, we need to know her view on energy. Joining me now, Envestnet's co-CIO, Dana Daria. Dana, let's be clear. It takes much longer for the price drop in the wholesale market to appear at gasoline stations and on their signs, but we cannot ignore that RBOB has pulled back about 10% this week. Natural gas has retreated something like 17%. Is the energy trade, which has been really sizzling hot, a place you still want to be right now?
Yeah, actually, I do think that energy is a place that you might want to consider staying for the time being. I don't particularly think that the decreases that we're seeing are, necessarily here to stay. I think we're maybe one hurricane or supply shock away from even more soaring prices. We have summer vacations coming up, the driving season. I don't particularly foresee, a steady drop in prices. And I also think fundamentals, profitability favor the energy trade right now.
Well, Dana, what would be the sign in your mind and with your experience that the energy sector is now overbought? Not now, you say, but is getting close to overbought?
It's a funny thing because we if you look at ETF flows, you see money still going into growth. You see innovation, art, right, getting a lot of flows in spite of being massively down. Energy massively up, but it's still just a small portion of the overall S&P at the end of the day. I do think the headwind potentially for energy, of course, is this talk, around windfall profits tax, and we're going to go after kind of the oil companies for exacerbating the situation. That certainly, you have to factor that in. But I think, again, where energy prices are and the demand that we're going to see uptick, I would say energy is still a fair place to be. Certainly should be part of the package.
Okay. Yeah, and again, if you look at, say, even the refiners, I always check the refiners up in Apache, down 18% week to date, but still up about 97% over the past year. But I don't know, it's almost a little bit of a signal here. Signal to us where you really are turning your attention for your clients' money at the moment.
Yeah, I think it's about, how do you position, all signs point to continued slowdown, potentially even recession, maybe stagflation followed by recession next year. There are some thoughts that we're already in recession, right? We know that we don't know until months later that, okay, we hit into a recession. So, the obvious play is something like defensives. You can do that with quality stocks, that look at profitability, that look at credit default, et cetera. You can also do it from a technical perspective and look at low volatility stocks. One thing I would say to clients, though, is if you're positioned well vis-a-vis your risk tolerance, now is a buying opportunity. It's so hard to look at it that way, right? And certainly I'm not suggesting we're at bottom, but if you're a long-term investor looking at how you're going to make money over the long run in markets, you may want to be thinking about some areas of the market that are not typically where you'd invest in the face of recession or stagflation, right? Think even emerging markets, even small value stocks where the outlook is going to be pretty poor for them in the short term, but over the long haul, they can tend to pay off.
Yeah, short term, we just had Scott Wren on at the top of the show, and he said, do not go into EM, emerging market. But again, in retrospect, when you get 11 months out after a bear market and you turn around, you look back and say, oh, that would have been a great opportunity to buy. I think that's specifically what you're saying. Dana, thank you for joining us on this Friday.
Absolutely.
Dana Daria.